Good morning, traders. Here's your market update for today. The US dollar started the week slightly weaker as markets digested a mix of economic and geopolitical developments. A key focus this week is the growing risk aversion following the Trump administration's decision to pause trade negotiations, alongside weaker than expected US inflation data. Together, these factors have reinforced expectations of another Federal Reserve rate cut and contributed to increased market volatility. The upcoming global summit could play a crucial role in setting the market tone. Any signs of easing tensions could boost confidence and lift non-US currencies, while renewed tariff concerns might test the dollar support levels near 99. From a technical perspective, the US dollar index is trading below its 200-day simple moving average. This is maintaining a broadly bearish outlook. However, short-term momentum remains constructive. The relative strength index is currently above 55, hinting at a modest potential upside. The overall picture suggests a tug of war between cautious optimism and persistent uncertainty, leaving the dollar sensitive to this week's central bank decisions and global risk sentiment. Now, turning to oil. WTI crude is hovering near the $61 a barrel mark after a strong rally last week, its largest weekly gain since mid-June. The move has been driven by a combination of factors, including reduced Indian imports of Russian crude due to the US sanctions, as well as improved trade sentiment, which has slightly boosted demand expectations. President Trump's sanctions on major Russian energy companies, including Rosneft and Lukoil, have added further uncertainty to global supply. However, the ongoing US government shutdown, which may last into late November, is limiting further price gains by increasing market caution. Structurally, the current rally appears to stem more from supply disruptions and shifting sentiment than from a genuine demand recovery. On the charts, oil prices are testing areas of technical pressure, with support seen near the $60 mark. Momentum indicators suggest consolidation may be ahead unless trading volume strengthens. Overall, while price remains resilient, volatility is likely to persist as markets balance geopolitics, supply risks, and global growth concerns. In the gold market, volatility has surged once again. Spot gold opened sharply lower this week, dropping nearly $50 before stabilizing. This dramatic move reflects the push and pull between easing trade tensions, shifting monetary policy expectations, and ongoing geopolitical uncertainty. Despite the recent decline, gold's longer-term outlook remains cautiously positive. Persistent geopolitical risks and the prospect of further rate cuts from the Federal Reserve continue to provide underlying support. However, short-term momentum has turned bearish. Technically, gold is trading below its key short-term moving averages, and a bearish death cross pattern has formed, signaling a possible slowdown in bullish momentum. Support remains around the psychological $4,000 level, with resistance near 4,100. In essence, gold's role as a safe haven asset is being tested, with investors weighing optimism about trade progress against the enduring backdrop of economic uncertainty. And finally, the Aussie dollar, which started the week on a stronger note, rising towards the 65.5 US cent mark. Optimism around the progress in the US-China trade talks has provided a lift to the Aussie dollar, as many markets anticipate a potential agreement between President Trump and Xi Jinping later this week. In addition, the newly finalized US-Australia Critical Minerals Partnership is being viewed as a strategic move to diversify supply chains away from China, further supporting the Australian currency. On the domestic front, investors are closely watching upcoming inflation data, which could offer clues about the Reserve Bank of Australia's next policy steps. Technically, the US-Aussie pair is showing signs that bearish momentum may be fading, with the currency trading above the 14-day moving average. So key resistance sits near 65.70, while support remains around 65.10. Overall, the Australian dollar is benefiting from a mixture of improved sentiment, stronger data expectations, and hopes that the global trade tensions may finally be easing. So, in summary, this week's market tone could be described as cautious. The dollar is held steady ahead of a pivotal Fed meeting. Oil prices rallied on supply concerns. Gold faces a healthy correction after a record high, and the Aussie dollar awaits inflation data that could define the RBA's next move. As always, volatility may rise as central banks and geopolitics continue to shape the market direction in the weeks ahead. Thank you for listening.